Okay, assalamu alaikum. This is your brother Abdul, and we are going to start accounting, inshallah. This is another YouTube channel of mine. Basically, we will be dealing with accounting. وحرجينا أنا accounting في الزوج إن شاء الله بلا نعلم. وحن بررنا حلقة امتحان كروكا حلقة الهاجرة. Basically, مجرى عملنا مع الصومالي account سيف يعني فازي. But I will try my best to help you, okay? For those who will be planning to join university, for those who want to learn QuickBooks, can take advantage of this ongoing program, okay? And accounting system is a little before we start the books. Basically, we're going to talk about different types of businesses, the likes of sole trader, partnership, manufacturing accounting, company accounting, all those things, yeah? But before we go into that, we need to know the source documents and books of original intent. Why are we saying source documents and books of original intent? Because they have relationship. When you know source documents, is when you can prepare books for original intent. So now I will start with this one, source documents. Yeah? I will start with this one. Source document. Okay, now when they say source document is, you understand the word source. Where are we sourcing from when we want to prepare books of original intent? Like, what are you using? What are the basic fundamental items that you're going to use to prepare books of original intent is what we're going to talk about. Without wasting time, I'll be talking about some of them that will be very, very useful in our accounting process. The first one I'll be talking about is the invoice. Okay? Now, when you're talking about invoice, this is, you're going to say, this is a document, okay, that is issued when the transaction was done. When the transaction was done on credit, okay? On credit. That's what they say here. Yeah? To demand for the payments, okay? To demand for their payments. To demand for their payments. Okay? That's what we normally call invoice. An invoice is a document that is issued when the transaction was done on credit. Understand that we can only talk about invoice when we have credit transactions. So cash is not involved here. So look at this one now. We have types of invoices. We have types of invoices. We have number one, invoice receipt. Invoice receipt. Okay, this one is when we purchase goods from our supplier on credit, meaning we have not paid the supplier. So the type of invoice is going to give us is what you normally call invoice receipt. And I said it's used with the purchase day book. It's used with purchase day book. Okay? Don't forget. Because the purchase day book, we'll be talking about this one later. The purchase day book talks about credit purchase, okay? So, the kind of invoice we are going to source from this book, or when you want to record things on this book, where we are going to write from is what we normally call the invoice what? Receipt. Understand that? Then, number two, we have invoice issued. Invoice issued, yeah? Or you can say, yeah, invoice issued is our number two. This is the invoice that we normally give to our credit customers, okay? Yeah. So this type of invoice is given to a credit customer. A customer who's not giving us cash. The kind of invoice we are going to give him or her is what we normally call invoice issue, okay? And this is the source document that we use when preparing the sales daybook, where we record credit sales, okay? Where we record credit sales for your information, where we record credit sales. Then that is as far as an invoice is concerned. So we have the invoice received, we have the invoice received, and invoice issued. Okay, the invoice I say received is the invoice that's coming to our business from our supplier. Okay, and that is what we're going to use when preparing the purchase daybook. When preparing the purchase daybook. Okay, we have also invoice issued. The invoice issued is the invoice given to a customer when we are selling goods to a customer on credit. Just understand that. Okay, number 2, I understand that there's reflection somewhere here. Number 2, our source document number 2 is, let me say this was Roma 1, this is Roma 2. Then I'll be talking about this. Look here. I'll be talking about number 2 will be now, for your information, number 2, it will be, let me talk about the statement of account, okay? Statement of account. A very interesting one, by the way. When I say statement of account, remember the statement of account for your information is a document that shows, let me say this, is a source document or is a document that reflects all the transactions. Let me say this, all the transactions between you in bracket business and your customers and your customer. Yeah, let me say that. So, statement of account is a document which or that reflects all the transactions between you and all transactions between you. When I say you, it is the business for your information. It is the business for your information and your customer. Now look here, this one, we will be discussing this one, inshallah, in details when we will be dealing with books of original intent. But I will go briefly through this thing. I'll give you the general hint. Now, when it comes to this one, it's somehow complex compared to this one. The format of this one is that it must have the date, like one, date when you're prepared. Then it must also have what we normally call the balance brought forward. Balance brought forward. Maybe you had a balance with your customer of which he has not cleared. He or she has not cleared last month. So you need to bring down to this month. So we call it balance brought forward. Okay? You call it a balance brought forward. After that, we'll be having the invoices. Okay? We'll be having what? The invoices. Then we'll be having what? We'll be having what we normally call we'll be having payment. Payment. Then we may also have what we normally call credit note here. Understand this thing? Then we will be having outstanding balance. Okay? Outstanding balance. What do I mean? Because when we are preparing this thing, we have the date, we have the balance brought forward, we have the invoice, we have the payment, we have credit note, we have outstanding balance. Then what do I mean? Here, the date when you are sending this thing to your customer who was trading with you on credit must be there. Give us the date, please. Then there's what you normally call the address of the business must also be there. Address of the business must also be there. The address of the business must also be there. The address of the business must also be there. Then the address of the customer, the address of the customer must also be there. The address of the customer. Now look here. You need to write your address and the address of the customer, the date when the statement of account is prepared and sent to the customer. Now let me come to this point, because all these things are very, very significant. So the question here is, how are you going to prepare? This is the format now. Okay, let me write here the format. Let me write the format somewhere here, because I know we are lacking space. Hopefully this thing will help us later, but understand, because we are actually believing ourselves. Let me give you the format here. The format of this one is, we need to have the address of the business on this side, the address of the customer on this side. And you know how to write the address, that it is. But this is the case. You're going to say date, okay, details, okay. You can leave details also. Then we can also have what you normally call, let me write everything here. Details. Then we will have what you normally call outstanding what? Outstanding balance. Outstanding balance. Then here outstanding balance. Outstanding balance. Outstanding balance. Now, look here, let us say the first one we have is the balance breakdown. Day one, let's say, under this we have the balance breakdown, okay? Balance breakdown, which is now, let's say, from last month, it's 9,000. Okay? 9,000. Then, we will be having on day 2, let's say, we have day 2, we have invoice. Invoice number 203. Invoice will always increase the balance from last month, which is what? 6,800. Now let's say again, we have what you normally call payment on day 3. Payment will come in. Payment, which is now, 3,200. Now remember we are saying this. Let me put this figure into bracket. 3,200, yeah? We have this thing. And now don't forget that an invoice will always increase the balance. An invoice will always increase the balance. Okay? And the invoice will always increase the balance. So we will add this thing. So when we add, then we subtract this one, yeah? We may also have what you normally call on page 4, we may have what you normally call, let's say, credit note. Credit note of how much? Let's say 4,800. These two now, the payment, any payment made and any credit note made, now will go against this figure, okay? And therefore, finally you're going to get, you add these two, you minus this one. So that's how you're going to prepare. Until next time, I wish you the best.